Hello everyone, welcome back to the RationalInvestor.com's Weekend Frivolity. This is our funnily named Broiler Chicken Show. Hey, look at that. Looks like we're live on YouTube. I was having trouble setting the thing up here. Funnily named. Hey, there we are. Cool. I have no idea if anybody's going to watch the feed today or not. Unfortunately, TRI right now, our tech department is going through some site upgrades right now. And I was informed today that, unfortunately, things like the breadth indicator and the dashboard are on hold until they get this new upgrade done. Boo, hiss, boo. But anyway, it is what it is. TRI would ideally like to get all this done by the end of the year, so we have a deadline or sort of an objective of December 31st. So unfortunately, it does mean we have to deal with this if Fjord needs to take things down and reorganize on the software side on the back end. That's understandable. So my apologies, everybody. Anybody who's watching along the breadth indicator, it will be missing for the next few days. Fjord gave me an outside ETA that it'll be back up and running within the week, but you know, we're just gonna have to roll with the punches on that for now, so that kind of sucks. We're coming into the final I guess the final week of the level 1 program, actually all of the school programs this week. So I hope everybody has enjoyed the ride. Level 1ers doing liquidity events today, so buy the rumor, sell the news. And kill zones. Actually, it was kind of funny. Some of the level 1ers were like, wow, that's so cool. I just saw this happen through last night's London kill zone. So I thought that was kind of neat for them to get even more candy as they're winding up their level 1 journey. And if anything, I was kind of thinking for you level 1ers, I might invite Kiran, who is a prop trader at Top Step right now. He is our level 2 instructor. I might get him to come in and just pop in and say hello to you guys next weekend. It might be a fun sort of wrap up in your final Q&A session to get you ready for your level 1 exam. And he can tell you about some of the fun candy that he will show you in the level 2 program. Give you an incentive to kick butt on that level 1 exam. Level 3ers, actually we're just having fun playing with the DOM, and are very dangerous playing with the DOM, so I don't really like new people to even look at it. So they're sort of winding up their level 3 program. Level 3ers, keep in mind I want you continually hunting for those 4 option ideas that were taught to you in the introductory program. And ironically enough, I think only now Bitcoin and Ethereum and all those kind of stuff are actually setting up TRI-SOF short ideas. So that's a really good application of TRI-SOFs and derivatives options modeling for you guys. Kevin here has given me the link to the Q&A document that the level 1ers, keep in mind a big part of why I like to do these weekend shows, just to dovetail to what Wookie did there through class today. And if there was any sort of follow-up needed. So we can jump into some of this. Looks like there's just a few questions, so no big deal. And of course, everybody wants to talk Bitcoin, Bitcoin, Bitcoin. Do find it interesting. So I don't know. What should we do first? Why don't we bang out these questions, and then the second half, if you're just listening now, you can sort of time 2 speed or times 3 speed until you actually see me get to the Bitcoin chart, if you just want the chart analysis. So let's just quickly go through these. So number 1, can you please give us a hint of why the FU moves occur? If you can emphasize in crypto would be great. Is it the whales washing out stop losses before taking the price up? Let's take the following example. Thanks. All right, well, take a look. Let's see what we got here. This is Ontology Gas Bitcoin 4 hours on Binance. Well, I mean, you got a lot of moving parts here. First and foremost, it's a speculative asset. And anybody watching this and understanding the nature of speculative assets, penny stocks, illiquid penny stocks, altcoins would be a perfect example. We actually have like many different layers of speculative stocks, everything from really, really garbage exchanges. Down in the States, they have exchanges called the pink sheets. And a lot of these companies, even on the exchange itself, it says directors don't have any legal obligation to tell you the truth. Unfortunately, in cryptocurrencies, this is entirely regulated and nobody has to tell anybody the truth anytime whatsoever. So you are dealing with that. Also, too, a lot of this space is purely just algorithm driven. So you might have a situation, and me just looking at this, my hunch is, because you're looking at this ONT versus Bitcoin, there was probably some sort of algorithmic relationship here, and like algorithms were told to do transactions just based purely on sort of the Bitcoin price. Also, to notice that the volume was very, very low. So this could also be a situation where, somebody sees this M, they're going to drive it down here. And they might be able to create a cascade of stop loss orders, especially on Binance. I think they probably do a lot of that kind of trading. Hell, I wouldn't even be surprised if they let you margin trade on this kind of stuff. So, there's also, and it sucks, but it's a brutal reality, there's also people in the venture cap space. You can again see that these lows were done on very, very low volume. There might be people who actually painted this W very on purpose, very specifically to, hey, we know that Beamish guy, he's got a whole bunch of followers that'll buy W's religiously. Let's, fuck around with the price here and let's carve out a nice pretty W and get all those cocksuckers to come in. I mean, this is capitalism. Get used to it, people. This kind of stuff happens all the time. Also, too, we do need to understand that, maybe we have good trade location. You're right down against the bottom end of range. It looks like based on this study, this market actually took out the previous lows. So that's going to be kind of bearish unto itself. You're looking at a 4-hour chart. What does the higher time frame look like here? Has this actually started to turn around? And off the higher time frame, actually this is a bull? When I look at a chart like this, I see all of these highs here, and ironically enough, whoever asked this question, it might be kind of fun to do. It might drive you crazy. But I might suggest you go A, B, C, D, and we got 1, 2, 3 highs to work with. You might actually have a bearish bot setup working away here. So there might, and there are a ton of different sort of moving parts and variables here. I mean, maybe this idea simply failed because this is a bear and it's a piece of crap. One thing that I've noticed with a lot of new people, and actually I ran into this on Twitter today. I put out like a market symmetry chart, which is just me throwing some shit on a chart and just saying, look at this. This looks interesting. And people are like, well, you've been so wrong. And it's like, whoa, I'm not in the business of being right or wrong. And really, if I've traded this setup long enough, and frankly speaking, if you turn this to a clothesline, looks like that's actually a lower low. There's a whole bunch of problems with this, so I don't know whether I really would have liked this as a buy anyway. But what I've learned is all I want to try and do is be right more often than when I'm wrong. And then when I am right, get paid commensurately more than when I'm wrong. The amount of money I lose when I'm wrong. So this might just be a simple case where, hey, I bought the W, it didn't work, and I got stopped out. Next bus in 10 minutes. And you just move on to the next trade. That's, like when the market's a rip-roaring bull and everybody's just killing it and just having fun and stuff, and setups are just working away. That's just, nobody really seems to question any of this. But when setups actually start to fail and W's lose their lows, which I'm worried about, I got a funny feeling there's a ton of traps being laid in the market right now. You have to accept the fact that you're not going to be right 100% of the time. And maybe you might want to just cool your jets until you actually do start seeing W's work to come back in and start hunting W's again. You just sort of wait for the market to settle down. Or, and really this is the way I approach it, I understand that this whole damn thing is just one big honking statistical model. And, through seasonally appropriate bull markets, you're probably going to have a high statistic rate of win rates in your model. And then when we go through bear markets, you're going to keep trying to hunt W's, but you're probably going to find that fewer of them are going to work. And, some traders call it win streaks, lose streaks, whatever. I mean, it does happen. It is a trader's life. And ironically enough, it's only the traders that can get through that with a nice positive attitude and understand that, slow and steady wins the race, and you will go through hot streaks, and when you do, oh my God, it's like you're unstoppable. That's where you make a ton of money. And then what you got to make damn sure to do is don't turn around and give it all right back. So I don't know whether that helps speak to this question. I mean, maybe this is just it's a bad idea. Ideally, what we would have liked to have seen here, of course, is rising volume bars. So this rising volume bar, which was the high, wasn't really that impressive relative to this one. And actually, this is kind of like Bitcoin right now, right? We get a big sort of surge, which we've had recently, and the question is there any follow-through buying on the other side? And in this particular case, you can see that there just was very little to almost no buying interest on the other side. Could you have said, well, and this is probably a little more advanced, I see a W, I bought the W, I'm looking for up top, and now I see M's come in, and on this M, I'm probably just going to walk away. And what I wouldn't be surprised, there were probably a lot of people that did that, and the selling was so overwhelming the order book just fell apart. Keep in mind, these are pieces of shit speculative issues. Sadly, 90%, 99% of these altcoins are complete manipulation, total and utter manipulated. I watched the last cycle. We used to do a show on Coinigy with a guy named Alex Sturck. And he was one of these guys that was on the inside of crypto. And I don't think a lot of the public realizes this. There's sort of like an inside club, and then there's the outside, the rest of the world. I remember Alex telling us stories about guys who would be sort of, contracted to be market makers for these coins, and just like with one touch of a computer key, one touch, boom, an entire order book was filled with buy and sell orders. Just one touch. Just hit the F button. Boom. Instantly, the whole order book was completely filled with orders. the asset started trading away because this guy was running a bot just banging trades back and forth because he was contracted to make this market. So, everybody should understand that. And I don't think I really conveyed that message strongly enough in that last cycle. You have to understand, these are incredibly speculative instruments. This is the most possible speculative part of capitalism you guys could want to come to. Might as well be trading the Chinese third market. And then the question ultimately with these kind of things is what's value? What's this? What made a trader is good risk management and 2-to-1 risk reward with 6. Yeah, I mean, if you can hit 66%, I mean, that's really being focused, B2. That's what I think, our traders who are really focused. And did I not put a link? Oh, geez, everybody in the lounge was like, hey, what the hell, man? What's going on here, man? How do I do this? Share. Copy. And paste. Boom. There you go. Buck. So, maybe this is just a failed idea. There's nothing wrong with that. Should you have had your stop all the way down here? I don't know. I mean, I'm not quite sure why you decided that level. Could you build a plan that says that you're going to hunt for the FU move and, doing like FU trades, just buying one tick below the previous low on a speculative instrument like crypto? Okay, you could try that, but I don't know. I mean, the horizontal support and resistance concept, and actually, was this asked by a level 1 or like our first week back? In the level 2 program, we do horizontal support and resistance. And really, you have to think of big, chunky assets like fiat currencies where they trade to certain levels repeatedly so market makers can cross billions of dollars for corporations and stuff. Using the horizontal support and resistance and like doing the SFU, the setup on a speculative instrument like a cryptocurrency, and not even doing it versus dollar, but doing it versus another cryptocurrency, wow, you are adding a lot of variables to this equation. So I certainly myself, I wouldn't do this, but what you could do is you could say, you know what, I'm going to hunt for the fuck yous, because they happen in this space all the time. And I'm going to try and take advantage when I see the FU come in. But this is going to be a level 2 concept. I want you to pull up a volume profile on the asset and ask whether this is what we call single ticks, which is in essence the hallmark of the fuck you move. So the volume profile itself, and considering how low the volume is here on this candle, my hunch is you really didn't have a hell of a lot of trading down in here. So you could always just put in an alert. I don't know why you picked this level in particular to look at. Maybe because of candle body lows. That's what you were thinking. I'm not sure. But I could definitely see you put like alerts against these lows and just simply say, look, if they trade below there, I'm going to look at the profile. I'm going to see whether it's single ticks. And if it is, then I'm just going to quickly go in and zip in and grab some. But that's pretty advanced. Level 1ers, we want you to go slowly. Think of just, I want to get in nice, simple, easy trades that have a relatively high sort of, relatively high success rate, location, divergence, structure. I think you can get up into the 60% accuracy consistently. I don't know what the higher time frame location is here. I definitely don't have a structure here. I don't know whether I have a divergence here. So there's a lot of problems with that thinking on this. If you're going to approach this SFU kind of setup and you're going to be hunting against lows, well, understand this is an extremely speculative asset. Could this be manipulated to blow through these lows here and run some stops? Absolutely. Wouldn't surprise me one bit. Could you build a plan that says, okay, alerts go off. If I see it at single ticks, I'm going to go grab some. I'm going to instantly sell a whack of it on a revisit back to the mean, which is often like a moving average or the POC or something along those lines. And then put my stop to scratch. And if it does keep going lower, great. I walk away on the rest from scratch. Okay, but that's a very, very advanced trading strategy. Certainly nothing I would expect anybody coming out of the level 1 program to be at. But through the level 2 program, I think we could evolve those kind of setups for your trading plan. All right, so I hope that answers that question. Is the person who is here, did you, are you here who asked this question? Maybe. Are we lucky? Yes, no, maybe so. Nope. All right. Well, anyway, try my best. Hello, Peter. Gotta say, Peter's a fantastic example of a guy who's just consistent day in, day out, just keeps bringing it. Great to see you, bud. Okay, next question. Hopefully that helps. I talked a little bit about it. Number 2. Not my question from this week's Q&A, but was wondering the same. Off-topic question 3. Oh, okay. If I am looking at BTC log chart price, do I put my TradingView settings on my fib retracement tool on fib levels based on log scale? Benefits, disadvantages, etc. See ya in the reply. That's a good question. Remember, I'm this old-timer dude that get his price charts in the mail. So you can imagine it's not like something I could just quickly flip back and forth. Also, too, my classic technical analysis trading is from a commodity side, where it doesn't matter whether the product is $100 a barrel or $50 a barrel. 1 point is 1 point. So as a result, I would prefer to look at all assets in just a regular price chart. And then, of course, Fibonacci studies are nothing more than just a statistical ratios. So obviously, if you're going to look at the asset from a log scale, the statistical models just aren't going to make sense. What'll end up happening, and I just want to find a chart. I thought I had a chart. That was. Where can I do this? This one's probably, this isn't bad. So, if we look at this big honkin' bull run, right? The interesting thing about this is that, this is like, a 20-fold increase? So, if we change this to a log scale, then at least, the growth rate, at least it's visually understandable. And, if anything, it's probably better to look at these kind of studies in log scale because the supply of this asset is fixed. That's I think the important thing here. So as a result, what this is really doing is it's measuring the growth rate of this asset, right? And whole Satoshi, the mining reward, of course, gets halved over time. So how do you incorporate that into price analysis? That is that logarithmic type thinking. But, interestingly enough, when you look at a log scale, ironically enough, this doesn't actually really look too crazy. But, the fib levels themselves are not going to change. So there is, I think I have that right. There is a fib study of reload zones on a log scale going back to the low from 2015. So there's your reload zone way up there on this log scale. How does that help? I don't know whether it really does. The problem with thinking if you're thinking, I'm thinking like reload zone, like somewhere down in here, right? Down at the bottom end of the range. The problem with that kind of thinking, unfortunately, is it's sort of unwinding the growth aspect of this. This would imply, if we're thinking down in here, and of course, you guys are like, oh my God, don't go down there, is that the story has actually changed to justify this logarithmic growth rate anyway. So I don't think that's not something that I would study. Have I ever used, maybe that's a question I should ask. Have I ever actually used a fib study that's based on a logarithmic scale? Frankly speaking, I didn't even know that it even exists. So if that's the case, then I'm the last person in the world to be commenting on whether you should or whether you shouldn't use it, or whether how to use something. I would just be bullshitting you. So, because of the fact that if we look at log scale, we throw on our classic, fib studies. Actually, I'd just be curious. We go back to regular. Maybe that's backwards. Oh, yeah, that looks backwards. Right. So if we change this back to regular scale, that works for me. So... that's probably the way that I would look at it. I don't know whether that helps answer the question or not. Since I haven't actually used fib log studies in combination, where the hell was that? Like the question says here. Fib levels based on log scale. I'm not quite sure. Since I've never done that or used that, I can't really comment on it. Sorry, it sucks. And really, again, just going back to the basic premise of the way that I approach this, I use the fibs to just simply give me a statistical measurement of how much of this move has the market actually taken back. And my just simple rule is we get, 61.8. This is where a lot of professional traders will start coming in. Keep in mind, the pros, when they look at this, they're not going to touch this with a 10-foot pole. So all this really does is it just helps me see, okay, well, if the pros were going to come in, where are they likely to start? And this is my mountain man level, and you can see that, somebody came in and did something off this level. And then finally, my preferred level for trades, I love when markets set up off 78.6. 78.6% of whatever the previous bull move was. Which is interesting, because when we look at this study, remember we had our rally from a year or two ago. And it stalled out at 61.8, and all our level 3ers, of course, just did their harmonics. So they were quite surprised, when we went through this study to see the very cliche, exactly the same as this. Mountain Man is not, all I'm going to do is use the reload zone to just tell me where if this is if this is a bear, where are the pros likely to start stepping in and reloading? That's the whole reason why I give it that name. So, I think this would have been a really great gauge. Does it change? Is it still useful off a logarithmic scale? I mean, the reload zones, ironically enough, they don't change. It's just visually, that's going to be hard for your brain to really comprehend. Interestingly enough, off of this range, ironically enough, when you look at this in logarithmic scale, you realize that actually what we're doing here, it's not really that big of a deal. You might argue for the sort of long-term growth of the Bitcoin story. You can clearly see it. This obviously was a big consolidation, and that was that size. So, gee whiz, what a surprise. Just for fun, why don't we go like this? Go. Clone. and go, wow. So that's the one thing I don't like about log scales that drives you crazy is you can't do those, like, because I love market symmetry. So what I would do is I would look at this and I would simply say, well, we should replicate this up here. But when on log scales, when you do that, they go and change the damn line. So it looks like that. It drives you nuts. So what I wanted to show you, and I guess you can sort of visually do this if you adjust it. It's a little bit frustrating. But hopefully what you see is this is really, hopefully actually what everybody sees here is all they're doing is they're just stair-stepping this thing higher. Why are you not working? See, I hate when it does this kind of crap. I can't really, yeah. Anyway, so I just have to eyeball it. If I can get around to it. There we go. So this is really the same as this. Right? Not very good, but you get my drift? So can you see how it's just basically walking up the stairs? That's kind of cool, eh? These price numbers, of course, are huge, right? But keep in mind it was the same thing here, right? This is $150, and this high is what, 1200. You know, so that's like a 90% haircut. This high was 20 G's, and this low was you know what, 3,000 and change. Yeah, it's about 80-90% haircut. What I do find really interesting about this particular cycle is I wonder. We just went through a halvening, and I was feeling as though, where the hell do I have that chart? Oh, darn. Well, I had it on here somewhere, but anyway, it looks like I've lost it. Darn. I was feeling that the, oh, here it is, good. That this cycle's halvening was going to go similar to last cycle's halvening. This is such a great analogy. You're always a student of the market, right? So I think we came to this apex, and I think the market had the permission to go down. But did anything sort of happen through all of this window that maybe might have changed the rules here? And of course, this was all through that dilution of the US dollar, printing of money, all that kind of stuff. So I wonder if, you know, like if we went like real time M2 money supply difference, whether that dip might have actually been deeper. But I get the feeling that this dip here was this event here. This cycle just wasn't that big. You know, the last cycle it looked like, let's see if I can show you. And actually I'm getting way off topic here, aren't I? I should try and stay on topic. Where are we here? There it is. Oh, this doesn't go that far back. Oh, that's too bad. Yeah, here was the last halvening. So it was A, B, C, D. And we did the pre-halvening pump. This is so bizarre. Like some guys like, you've been very wrong. Fuck, we called this perfectly. We also called the pre-halvening peak and then the pre-halvening dump. Well, that was like totally perfectly timed. Then we've basically just gone sideways, but the only thing missing from this equation was just this 1 or 2 day face rip down. If you took that out of the equation and just sort of chugged along, actually current price action looks incredibly similar to that. So, you know, I don't know, not really calling anything. Ironically enough, I think we took profits, Shane and myself and Andrew on our calls here. And I said the other day that if we got a rally back up into this area, I was going to start looking at the puts again. Well, here we are. So I'm going to be watching over the next few days. You know, when it comes to Bitcoin itself, you know, again, there's the fib study. I'm staring you in the face. We could also drag it up there. So again, reload zones. I thought it was really interesting looking at why the market stopped up top here. Look at that. Any of you guys remember I made reference to the candle body highs and lows for trade location? I saw that this morning and I was just like, you gotta be kidding me. So clearly somebody stepped in front there. I think we were also, well, actually, let's go back to the questions. We don't need to talk more Bitcoin right now. Okay. Okay. So fib levels based on log scale. Oh, and that's inside the fib study, I guess. I've never used that. So why don't we, like through daily briefs and playing around on the sites and stuff like that. Maybe we should take a look at it in there. I don't know whether, since I've never used it before, I don't think really this is the venue to sit and go, hey, look at that. Oh, look at that. If you can show me a better mousetrap and show me how to use this, and maybe even have like a link to tutorials and stuff, we can think about incorporating it into our work. But I haven't personally ever used it before. Okay, so since you added that, I guess you're here. I'm sorry if that's kind of a shitty answer for you, but it's basically the best answer I can give you. So I'm not going to bullshit you. Well, okay, so Cole asks here, would you say log scale is more appropriate for any asset that goes parabolic? The key here, and I'd say no, the key here is what are you measuring? So, like I said, with like a commodity, if I'm like a futures trader, 1 point is 1 point. Doesn't matter what the underlying price is. 1 point is 1 point. And usually, like crude, for example, 1 point is $10. $1 in crude, I think, or in gold, I think, was $1. I can't remember. Maybe it was a penny was $1, and $1 is $100. Anyway, it's been a while since I've traded gold futures. So really, we use log charts to measure growth. So you might use a log chart like on a gold chart to measure the demand growth for gold. I like the log scale charts for stocks if you're trying to measure the growth of earnings and the effect of the growth. So, for instance, a company that earns a penny a share, their earnings growth or the growth of the company is very, very different if they grow earnings by a penny or basically double earnings versus a company that earns $1 a share and it grows its earnings by a penny. So you have to have some way to measure that in the market. And that's where log charts are appropriate. So it really all depends on what a penny is. It's relative. Does that make sense, Cole? You know, you use log charts to measure growth. I suppose you could argue that for futures traders trading Bitcoin, $1 is $1, whatever the multiplier is. Doesn't really matter to them. But if you wanted to measure the long-term growth rate of Bitcoin, then using the log chart, I think, is okay. The only problem with using log charts on things like altcoins and stuff to justify their growth rate is it's just way too far, way too fast. And actually, what we're going to get into, I don't know, Cole, are you in the level 2 or beyond? Because what I would suggest you actually use to try and measure natural and healthy growth rate is GAN, right? 1 point in time equals 1 point in movement. So, okay. Hope I mean, really, my answer here is I've never used this before, so it kind of sucks. I'm sorry there, whoever asked that. Number 3, just thank you that you create TRI, and thanks, Graham. That is awesome with Shark Toe, and Kevin. I have the feeling that I'm improving a lot and more confident, even if I'm mostly papering. Boys, Bezos. Okay, thank you. Cool. I guess that's a shout out to us. Appreciate that. The cool part about it is Grim is such a rock star. That guy's got the patience of Job. I love working with him. I think he's a really, oh, it means kisses? Okay, cool. I think he's an excellent person for you guys to try and emulate. Kevin and Sharktoshi, I mean, really, we got super, super, super lucky with having both of them as TAs in this last program. We had a little bit of a bumpy start there, but I think that's probably just my fault because I didn't give these people the best guidance. But on balance, I think you guys that were in the level 1 program this last term, I think you were really well served. And I'm super proud of all three of these guys. I think they all three of them will go on. They're relatively young, all each. If they just do everything that they try to teach all you guys, they will all individually be very, very wealthy down the road, if they aren't already. And that's the interesting. Well, okay, that's a slide. I was gonna say that. I think I mentioned it, but I'd like to have Kiran come in and just chat with you guys in the level 1 next week, just so, if you are interested in moving on in the program, you can get to know him a little bit. He's a really cool character, too. If you do decide to move on to the school, or if you need some time to digest, perfectly fine. There is no pressure whatsoever. What I would highly suggest you do, though, is try and just at least maintain a site membership, and then that way you sort of stay in the loop. And all of these people like Graham and Kevin and Joshua and myself and Julian and Stuart and stuff, we're only a shout away if you need some help. Most important here is the process, right? So hopefully you got that whole concept of the process, and really you will know actually individually when you're ready to go and move on and progress. I fully acknowledge some people might come through this education program and go, you know what, this is a lot of work and it's just not for me. I thought it was, but it turns out this is a lot harder than I originally thought. And that is perfectly all right. If anything, it's better that you learn this now. You get this straight message of how much work is involved if you want to do this seriously. It's better that you get that message right now and get it firmly implanted in your eyes. And you can just create like a dollar cost averaging or little old lady kind of approach, retirement account kind of idea. And with the information that you took from the level 1, you can basically, that, as long as you don't risk more than 5% on any one single idea, you're not going to get yourself into too much trouble. For those people that do want to be traders, man, I'll tell you, I wish I had a place like TRI in my life 20 years ago. Would have made my journey so much easier. So anyway, okay, looks like we've attacked the questions. Is this question part of the education program? Not really. So my apologies there. We talked a little bit about illiquidity with the venture market, and then the added variables of trading against crypto pairs, and then maybe ask whether the higher time frames had things like weekly W's working. And, at the end of the day, if the idea was perfectly valid and it met all your criteria and it just didn't work, well, at least 30-40% of the time, if not more, I actually expect my ideas not to work. So you're just going to have to get used to that as a professional in this business. All right, what do you say here? So appreciate all of them. Yeah, I mean, what's so cool is Sharktoshi is, ironically enough, a lot of you people all come from the computer industry, and Sharktoshi is a monster trader, a computer programmer. And so in the level 2 class, our final module is building scripts and Pine script and algorithm trading and stuff. And he gave just a knock the cover off the ball presentation for them on Friday. They were so lucky. That was such a great presentation. And of course, Shark Toshi's algorithm, his computers are gonna take over the world anyway one day. So, okay, so we'll put the Q&A to bed for the time being. I mean, perfectly good question. It's a trader's life. That's a trade idea. Just doesn't look like it worked. Monday to Friday we sort of talk about the broader market. So I suppose check out the free videos with regard to that. The only thing I'll mention with regard to the broader market is, I still think we're in this violently flat market state. I wouldn't encourage people to get too euphoric through this. We're up at the top end of the range, obviously, on everything. And what I'm also worried about, and frankly speaking, it almost makes me not want to do this school, not want to do these free YouTube videos, not want to actually even interact with the public at all, is I fully know that we're all going to go fucking apeshit crazy here into the end of the year. The gold is the ultimate market's proxy of, oh my fucking God, the world's coming to an end. So when you see gold doing this, you need to understand that that means a lot of humans are freaking out and shitting their pants. What am I supposed to do through all this? We're going to see absolutely chaotic, just, all over the place price action. It's going to be very herky-jerky. I can see people's emotions are incredibly ramped up right now. I don't know. I had publicly conjectured a week or two ago. I kind of said, you know what? Maybe we should just do these broiler chickens, just make it private. Because it's almost, like when I was a full-service investment advisor, we would often say that, somebody comes to you and asks your advice. Technically you have about a 33% chance of giving them information that they actually, at the end of it, are going to go, oh yeah, totally, that was so awesome, thank you so much. I've said this repeatedly in these public broadcasts. It's actually not in your best interest, each and every one of you. Like B2, you're probably getting a little bit smarter in your ways. Oscar, Omar, William, Jack, Andrew, Shekrat, Shark Toshi over there. You all have to understand it's not in your best interest to get into the business of predicting the future. It just isn't. And what's going to end up happening? I can absolutely guarantee you it always happens. Markets that move up, the people that had made bullish calls, they are going to be, look at me, I'm the shit. Subscribe to my newsletter. And the public's going to be like, woo! And then the public, the people, of course, that in that particular case, that exercise caution and that advise caution, people are going to be like, oh, you suck, man. You're no good. So, and we're in a type of environment where I think you're going to see both up and down repeatedly over the next year or two. We already went through the big up last fall. It was just silly how the market just kept going higher and higher and higher and higher. Then we went through a big down in March, and now we're going through a big up, and I think in the fall another big down's coming, and then we'll have another big up, and it's just going to be all over the place. And frankly, like I said, I don't even think it's in my best interest to come to you week in, week out, trying to explain and say, oh yeah, this is what you should do. Oh, that's what you should do. Because I can guarantee you, a lot of people that are going to be making those calls are going to get their asses kicked. Maybe they're right once or twice or two, right? So, oh, look at me, I'm doing awesome. And all of a sudden, bang. Anyway, the point that I would just say with this kind of image is that this is not the kind of image that you really want to see as somebody who's like, is it a safe time to go and invest my hard-earned money? I don't think it is. But having said that, we've probably got about a good 4 or 5 months heading into this U.S. election where things are going to be all over the place. Could gold price double from here? Sure, why not? What the fuck? Could Bitcoin price double? Sure, why not? I was posting a harmonic, and this is really freaky. Is we were looking at these harmonics, and actually, I think Oscar, you were the one who pointed this out. But we actually drew this harmonic from like forever ago. I couldn't believe it. And just watching it slowly work itself out to the point. Oh, did I get rid of it? Maybe I did. I guess that's what this was. I was absolutely stunned at watching this play itself out. And if anything, I hate to say it, crypto kids, but you don't want to see this play itself out. But oh well, it is what it is. This is what's called a Gartley pattern. Not sure I have these levels exactly right. I can't remember. Are we 78.6 or 88.6? Anyway, somewhere up in this area. Now we have this pretty well-defined head and shoulders that wants to take us higher. To be honest with you, I would have preferred to have the shoulder come in down here. It would have been technically a little more sound. But these shoulders can look any old damn way they want. The key, of course, to all of this is we have to break through this 10,500. I'm not totally convinced, especially the time of year. I'm not totally convinced that we go and blast through the highs here. But judging by the fact that this Gartley just looks so well defined, and it would take us right into this insano nutso political uncertainty, i.e. gold's going to go nuts. I would imagine Bitcoin probably going to catch a good bid. US dollar, massive uncertainty, probably going to get its ass kicked. And, if this head and shoulders AB equals CD, I mean, if we, that's the ABCD. And this is the head and shoulders 200% extension. Whoops. I don't want to do that. Boom, boom. Boom, boom. Oh, look at that. The head and shoulders takes us right into that 88.6. Oh, so close. Anyway, somewhere up in this area here. If this is what it is, then it is what it is. It's just the way that it is. But I'll tell you, if this actually plays out the way that it is, and we do this, this is not good going forward. It means probably a few years of backfilling before we can get going again. But what the hell? All you people that had the balls to step in off of here, congratulations to guys like Sjord, who just threw himself on a dollar cost averaging plan, and he's just been accumulating. His rule, he says, is once we get above 20,000, he's going to start liquidating. So I don't know whether he's going to get his level or not. But if I understand correctly, he said if we get above 10,000, he puts purchases on hold. Okay, well, fine, so be it. Then there's guys like Julian, who are having a lot of fun leveraging stakes, trading things like crude oil and gold and S&Ps and stuff over on that Simple FX, and just building up his Ethereum balance. So he's having a lot of fun. Actually, I guess that's two very different ways to build your crypto stack. One very slow, and one insanely hyperwave speed fast. All I really care is that, just articulate what your plan is, and of course take appropriate risk, and just simply get in there and rinse and repeat. When the market proves that you were correct, and it affords you the opportunity to pay yourself, pay yourself. If, unfortunately, the market proves that you were incorrect, and I think it's a good idea that you somehow define what incorrect actually looks like, that you just get into capital preservation mode and you just cool your jets. So, how you approach this is entirely up to you. Are we in a... the conversations that we've had in the past through this window here, we figured out that the cost of production was somewhere around $2,000 or $3,000 for Bitcoin. So that low made perfect sense. We came into this event, and as of here, that cost of production now is doubled. So let's say somewhere between, $4,000 and $6,000. So if I can get pullbacks down into this level, and maybe it's after this rally and it's over the next year or two, that's where I believe value is. But so what? That's nice. Brian thinks value's here. Market will do any old damn thing it wants. So with that said, I mean, can I in good conscience go to Granny Newbacher out of where was she again? Hoboken, New Jersey, I think. She's saying, Brian, Nick, is it safe to go in and invest in Bitcoins right here? I would have to say no. I would have to say, well, I mean, you could see this asset double in price from here. You could see this asset fall 50% from here. If I want to keep you out of trouble, then I'm going to suggest, Actually, I put a tweet out this the other day. Kind of pissed a lot of people off, but it's exactly how I feel. And the one good thing that I like about what I do is I'm not going to bullshit you. I'm just going to give you straight goods. And my comment, if somebody in the public came out and said, well, Brian, I'd like to buy Bitcoins, I said, well, I'm just going to throw on your reload zones. But I guess the last 50, well, I mean, to hell, we can just even do this particular range. And as soon as we get back to Mountain Man, call me up on the phone. Let's go take a look at price action. Now, that might mean, and I'm totally fine with this, but that's just me. Right? That might mean that, hey, we have to do our reload zones off of that level. You notice that the reload zone itself didn't really move a hell of a lot. You see that? The top is 6,400. The bottom is 5,300 off of those levels. Here, the top is 8,200. The bottom is 6,300. So, again, all around that, that's all swimming around that $6,000 area. And, I hate to say it, but there are still people out there, and frankly speaking, it wouldn't shock me. I mean, if the United States government comes out and says it is illegal for U.S. citizens to own Bitcoin, you must own this Federal Reserve currency. They've done it before in gold, so there's no reason why they can't do it in Bitcoin. Be aware of that. If anything, it's kind of a sad commentary, but the United States of America is actually an extremely controlled economy. And when Big Brother wants you to do something, you better jump. So, and I suppose a lot of countries in the world are like this. I suppose Canada's just the same. So, if we get into some sort of insane face rep and the price is all the way back up here and we start showing signs of failure, I'm going to start thinking, oh boy, we got a long way to go down. So, current situation is I don't think Bitcoin's expensive and I don't think Bitcoin's cheap. Expensive is up here, cheap is down here. Right now we're kind of just like, I mean, you could go buy it. Got a coin in your pocket, flip a coin, whichever way it goes, it goes. What I'm a little worried about just here in the short term is I don't think it's Bitcoin that's really leading this charge, and understandably so. Can somebody tell me what's the Bitcoin FA story? What's the fundamental driver here on Bitcoin? I don't think there is one, is there? It was just awesome on Friday. Oh yeah, so you were in class with Shark Toshi? Oh, Rob. All right, everybody's got to hear you on YouTube. Officially, Rob would like to say hello to everybody.
Hello.
That's not your hello. Come on.
Now roar.
There we go. I don't speak that English shit. I want to hear animal talk. Just kidding. Rob's a fantastic guy on this site. I love having him part of the community. So anyway, I just saw him say that Richard Hart hasn't cried yet. We're still moving higher. Actually, I asked him a few months ago, I was saying, are you feeling optimistic? And he was like, I'm feeling a little more. And that was about 6 months ago. I bet you he's probably feeling a lot better now. Okay, back to our funny story here. Is there a big fundamental driver going on right now? Yeah, there's a huge one. Somebody here in the Hangout, can you just grab me a link to when the Ethereum is going to hit the world in earnest? right? There's a big old Ethereum event coming up here. So I do completely understand the rally in Ethereum and anything sort of Ethereum related. It makes a lot of sense to me. As a guy who likes to, buy against lows, sell against highs, should it surprise anybody? Brian was saying, well, coming up into reload zones, I'm going to start accumulating put options. I don't think that should surprise anybody. Having said that, is that my entire stake? No, they were really nothing more than insurance policies. And I'll even add some more as we move along here. I don't know whether we've officially topped out here yet, but what I see going on here, and this is what concerns me here, is I do believe it's an Ethereum push. And of course, they've got a big fundamental driver coming up here, so that makes sense. Believe it or not, actually, I think we just went through a transition window, but interestingly on this one, we came through the consolidation window and instantly put in a W and started to rally. So in a weird sort of way, I know it's going to sound crazy, but I think there's a very realistic shot that if this orgy gets going crazy like, and I put sort of funny tweets out to that effect this morning. I don't know where the bottom is here. I think it's there. But if we start going crazy orgy like, where's the midpoint pivot? It might be somewhere in there. But we could very easily shoot up into this sort of high 300, 400 area. That really wouldn't surprise me. I'm a little bit concerned about what I saw here this morning. I think there was an absolutely fantastic little pivot through here. As I said, and I think I've said in public broadcasts, I did go buy another put for December here. But I'll tell you, if I get another, any kind of topping up, big fat M, this kind of thing, I might go buy another December add to that position. But we're coming up against this original high. So this is a bit suspicious. Also, too, I kind of like to see W's on other sides of trend lines. So I would have preferred, it came right up against this trend line, bang, 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 jumped up, down below, and then just quickly snapped right above there. I would actually prefer to see a W on the other side of this trend line. For me to be like super bullish off of like higher time frames. What I'm worried about here is we're awfully close. The stock market, a lot of people in the stock market are looking for the end of July pivot in the marketplace. And what I noticed is the currency markets are all moving into some sort of big event here. US dollar index is very smartly being repriced here. And gee whiz, 29th of July, big FOMC meeting. So I got a funny feeling the whole damn market's moving into that event. We might hear from the Fed that, hey, look, stock market's right back up at the old highs. Lots of funding. Maybe we're going to actually try and normalize interest rates again. Wouldn't that shock everybody? So that, there's lots of talk, and I put tweets and stuff out from Kramer and, Larry Williams and stuff about looking for some sort of pivot into the end of July. I publicly said that all through the week, so I was kind of like, gee whiz, guys, what that means is the market's got basically a window here. That Fed meeting is Wednesday. I don't know whether it's a Wednesday, Thursday, or just Wednesday. But of course, our rule is don't trust the first hour following the Fed announcement. And of course, they're going to have a press conference, and it's following the press conference. That's when we can actually start believing price action. So, to me, that means they still got another 3 or 4 days of nonsense here ahead of us. And then, once we get on this event, well, gee whiz, there's that end of the month pivot. So be careful here, everybody. Be very, very careful. I really do not like the idea of people chasing. And gee whiz, look, we're right back up against another reload zone. This is kind of like out of the fire and into the frying pan. I think there was some cute little shorter time frame, lower time frame trade setups there for people. I think we were, I don't know which chart I had it on, but off of, no, it wasn't there. I guess it was here, but it's not this chart. You can actually see right now in the lounge, I'm kind of like, oh boy. We had, on the hourly charts and stuff, we had bear divs. I don't know whether I really like the idea of hunting a short here on this just as of yet, because this funny little chaos level up here. I got a funny feeling this is a bit of a trap they're laying here through Sunday. So I've stumbled upon this fun tool. There's still a debate, on the site. We're all students of the market, so we're all just trying to sort of figure out what the hell's going on in this world. Nobody's ever sort of written up any instructions on this, but what I've found is that this is, if we look at if you think about this as a W, sort of this is a big battle in the marketplace, I'm a bear or I'm a bull. So the bulls won, but in essence, as of here, everything's down. Market counter trend rallies, and then it comes back, and this is the fight, I think, this part right here, where we're a bear and we're in a bear trend, but the bulls stop the bear slide and turn it back up and head up. So I like to measure sort of what's called the Feigenbaum, I think that's his name. This concept that the market, the universe moves in this fractal sort of formation. And if we express this energy here, using this Feigenbaum, and I don't even know if it's his number, somebody else's number, but 4.669, it sure is a great tool. Keeps you out of a lot of trouble. So, I saw this, and a really good example from the stock market here recently was, oh, by the way, if I'm, and Brian's kind of a, I like the stock market. Remember, I was a stockbroker. So if I'm going to play the blockchain trade, I would actually prefer to trade it through the stock market, but that's just me. So this is kind of a cute story. This is a blockchain mining company listed in the venture exchange. And, the interesting thing is, what's Ethereum done through the weekend? Well, it's gone up a little bit. So what do you think this thing's going to do first thing tomorrow morning? I should have a nice little treat tomorrow morning in my stock account, but I'll keep you informed. And for the gentleman who really needed a quote-unquote right fix, I'll at you when I bang out this double. So what I wanted to show you was that, and so there's the chaos level there, and this is going to be interesting. So there's 50% of the range, 17.5, but the chaos level off of this consolidation, if we break this 8 high, says 22.5. So I'm wondering if I should get a little greedy in here. And interesting too, we have this nice downtrend line that actually would price if it just banged up against these highs, right into that trend line, and good old Feigenbaum, and of course that would be a top of value. But that's sort of like anticipating, and that other idea I showed you is anticipating. Why do I kind of like this Feigenbaum idea and this chaos level? Check this out. So I had this cute little idea, and I drew up the little Feigenbaum 4.669 extension, and we had these rallies in here, and I was kind of like, well, it's up there at 22.5, and really, they just reorganized the company. There really wasn't anything on the order book that was standing in the way of this. So I was just like, man, just be patient and disciplined. And sure enough, I got my fill on Friday right at that level. And it just crapped out following that. So I was super proud of myself for hanging in here. So again, for the guy who needs to be right and says that I am always wrong, well, there you go. There's a nice big fat call that I publicly made, and I made money. Anyway, as I said, in this silly little idiot Twitter feed here, you get a lot of snarky little like, well, man, you're always wrong. There you go, buddy. Merry Christmas. Right in your face. Actually, I'll take the profits from this and I'll go and enjoy a nice steak dinner thinking about you, buddy. So coming back full circle, I don't know whether I want to think about this as a top. What I actually like here, I like the idea that they're setting up an FU here. Because keep in mind, this is Sunday, and what I've often noticed is I'll do these videos following the New York kill zone, and that's what I think happened here this morning. Pretty cliche, to be honest with you. You know, like this rally here, if we take that down to like a 1 hour chart, you see that, gee whiz, the rally happened there 3, 4, 5, 6 a.m. in the market, right? That's all through sort of late London kill zone, early New York kill zone, and of course they've frozen all the kids out. And actually what was so sick about this level, check this out. So this is a 1 hour chart, but you've often heard me talk about levels in the past. And how I love gaps. So this is a fantastic, actually, oh, I think it's on the stamp chart. It's better. Where is that chart? I was absolutely astounded when I saw this morning. Posted on lunch. There it is. So, you know, I love 4 hour candle body highs for trade location. And I even tweeted out, I was like, well, you know, if we get up into this area, I'll definitely think that the shorts are going to step in. But look at this. This is ridiculous. So 4 hours, you don't really see anything. You can sort of see it there. But do you see this funny little wick? You've heard me talk about trap bulls and trap bears. That's a great example of a bunch of trap bulls right in there. Watch what happens if we go down to like the 30-minute chart. Turns out, and we zoom in on that level. Hello. So, you know, here is, you know, think M top, market smiling at you, sell. Ah, the sky's falling. But what's fascinating is that they left a price gap there. And this is on stamp, right? So this is one of these big cash markets. This this gap should be filled in. And that's that 4 hour candle body level that I love. And, you know, Baidu, you're trying to learn through this free feed. Write that down. 4 hour candle body levels. They're just ridiculous. So, you know, keep these levels, the purple and the blue, in mind, right? Thinking about candle body highs and gaps and wicks and tails like to be eaten. And look at where we stopped here today. I mean, look at that. There's the gap right there. I mean, if you just threw your order in to sell at that gap, would that have been a half decent fill? I mean, it's insane when you see these. And, you know, another one of these Twitter idiots is like, oh, no, this is not relevant, lower time frames. Nobody's going to be trading this shit. Fuck you. You know, I mean, the point here is that that is an important level. And if you were watching the price charts and if you were on your game and you saw the price was going parabolic, kind of the same thing with that gentleman that I was saying that that volume profile in the FU move this morning with the altcoins. If we had put a profile on this and this was on single ticks, well, we're starting to build reasons to justify taking a trade. Let's see. Yeah, there we go. So that's actually a perfect example of what single ticks actually looks like. That's really cool. So gap levels, single ticks, market's going parabolic. There's 78.6. You know, traders got to trade. Question is, do you have the balls to actually pull the trigger? A lot of people in the world don't have the balls to pull that trigger. That's a damn difficult trade. So that's sort of what I think's happened here today. What I'm worried about, like I showed you with that ETH chart, you know, if we zoom down to hourly, it's the same sort of thing. This one, they did ramp it up again, 2-3 a.m. Interesting time, just coming out of that London kill zone. So they painted that top, but that top, but that top, I don't know. It looks suspicious because where is that? Where is he? Oh, I thought he was up here somewhere. Anyway, there's, this guy right here, 322.03. And notice this high here was 320, what was it? 321 even. I don't know, man. I don't think that's been traded to yet. which would just be absolutely perfect, because this would be the most beautiful little FU setup here, where they'll probably come up, just run these stops right up through here, right into sort of like a nice liquidity pool, maybe Asian kill zone, maybe London kill zone, who knows. And they've got a whole bunch of crypto kids here that probably have, shorted up in here, or maybe started shorting M's, whatever, and they've got a bullseye written all over them right here. That's sort of my feel right now. Anyway, we'll see how it goes. Only time will tell. Let's see. Anything else that's got my attention right now in crypto? This is interesting, for the level oneers, and this happens to be Euro versus USD on fucking the casino. It doesn't really matter, but hopefully all level oneers are starting to see setup that we try to teach you in this level 1 course. This happens to be a 4-hour. If I go like an hourly chart, hopefully you can see this. So we've got a big move up. We've got a momentum picture where you can see higher highs. Lower highs. Hey, that's not right. And then even lower highs. What's this actually? One of my favorite expressions in trading, where you have this big divergence and this divergence all coming in. Double divs, right? Willie's nice and stupid. There's a big potential M coming in, and gee whiz, I see this all the time in the market. It drives you crazy. Can you see how there's a manufactured trade happening here for a move just back down to the 50% roll? It's like almost 2-to-1 textbook perfect. So, I don't know. Put it all together. I cannot be a buyer here without a shadow of a doubt. If I did want to be a buyer, I'd probably just sit and just relax. Maybe wait for first stop to be traded to. Then we can find out whether this thing's going to bot out and maybe take off like that. Or maybe we have to come all the way down to 50%. These guys get paid, and then maybe we dip into reload zones, do something like that. But for the time being, I couldn't touch that with a 10-foot pole. That's just me. So what? We have a rule on the site. Whenever you see confirmed bearish divergence, if you are a bull, you better cool your jets. And it's just that simple. Hey, there's Sjord. Hey, I wonder if Sjord feels like coming in and giving us an update on how the site's going. Actually, I'm surprised he's still hanging in there. So way to go, Sjord. If you are watching, I doubt he is. He's probably hip deep in computer crap right now. All right, so what else should we talk about here today? I did put a tweet out to this effect, and I think this is important. Again, I don't know whether I believe that this move through here is really for real, but if we can, and actually this is the daily chart. I think the tweet that I put out was a weekly. If we can close the week above these levels, and of course, old curmudgeon dinosaur technicians, they're going to want a 2-bar confirmation. So be aware of that. But if we can close above, and actually it's really interesting how they put an M right at that level. If anything, maybe they're kind of going, hey, all you TRIers, pay attention. So if they can go and close this thing above this level here, that's going to create a massive W. Do we like W's? Is W a friendly letter of the alphabet or a shitty letter of the alphabet? Suppose if you're a bull or a bear, that's we do. Colleen likes W's. Beautiful to see. Colleen's such an excellent example. She went through the whole course education program. I think she understands the game, the process. And, I see her in the lounge over the past few weeks. Hey, banged out a double here. Ooh, hey, look at that. I got filled. I sold half on a double. Imagine that. So it's so great just to see people just doing what we teach. It's awesome. So awesome. Congratulations, ma'am. Way to go. So the point of the matter here is that, I don't know whether this is going to set up a trade. I mean, because the point here is if you go and buy this, you got to be able to risk all the way down to the bottom. Are you really going to want to take that much risk on one trade? Maybe not. But, the higher time frame players, investors, believe it or not, this isn't an outlandish trade idea. Nice and simple. Where's 2 to 1? There we go. That's not really too crazy. Nice and simple. This is sort of like when we're in our education programs and we're trying to talk to students about what do institutions see? What would institution, JP Morgan's, Goldman Sachs, what do they want to see to actually say this is investment grade? Well, I can tell you, they want to see that. And they want to see a close above these levels. What is that close there? 306, I guess call it 307, 306.34. So let's call it 307. Now, keep in mind, it's noon on the wet coast. We often see these markets do some screwy shit following me hanging up from these calls and going out and hanging out with Liam. So I don't know how the hell this is going to end the day. I'm not calling anything here. But what I am going to say is, if we do and go and put in this big honkin' W here, I do believe the bear market in Ethereum is over. Now, I do find it interesting, too, that, gee whiz, what a coincidence, we are finally getting this big event, right? The whole big Ethereum 2.0, right? And I don't even know whether it's live. And that's assuming, of course, that it works, right? I mean, just because they hit the on switch. Ask Sjord what happens when you hit the on switch and things don't quite work the way you expect them to. So the point here is, okay, we've got a big catalyst, and clearly the market likes what it's hearing. The market likes what it's seeing. The market actually, ironically enough, I think the market is rooting for Vitalik. I think everybody in the crypto space is rooting for him. Everybody wants this to succeed. We want to move on to that next step. I saw one article that said, you think Bitcoin's the future? No, it's Ethereum, right? So we're getting into that kind of talk again. That's a little bit bothersome in itself. A really easy visual way for you to see this, and you can do this on almost any chart, is hopefully what you guys see here is there's really just like a big war line here, eh? So you can kind of see it looks something like that. Maybe if we change it to, yeah, there we go. So, and you can do this with almost any asset. This is a really good conversation about, I talk with students about the parking garage and how markets trade in levels. So you could actually see, see how this is a level. And then we accepted above the level and we banged up to here, pulled back, then accepted above the level, bang back. Then we accepted below, right back to this level, then bang up to this level. Isn't that cool? I mean, literally, you can see it's just moving its way through the parking garage. So this level right here is obviously, this must be like, I don't know, housewares, kitchen utensils, right? And we want to get up into the toy store, which is way up here. Vitalik's penthouse? Do we want to say that? I don't. That's a bad image. But yeah, Mr. Vitalik, Mr. Vitalik. You are paging Mr. Vitalik. You are wanted in women's lingerie. So. The point here is that if we can accept above this level, and I think it's a huge hurdle, this is a big if. Interesting how the 2 to 1 almost perfectly aligns that basically you're going to be taking profits. Remember, we've talked about trap bulls. You can see there's a bunch of trap bulls there that would love to get out of there. And fascinating how that's basically the original M structure top. I think that's where Mr. Hart started crying, right in that area right there. So you want sort of a barometer, what Brian thinks is going on, this is what I think is going on. Problem here is I can't assume that we're above this level yet. I wouldn't be surprised if it's something like this, something like this, something like this. Might even be a real hard, nasty railroad tracks. What I would prefer is we come up, consolidate, 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 and pow through the top. And keep in mind, right, we're coming into the fundamental event. How does the expression go? Do we have any level oneers still on the call? We want to something the something and something the something. Excellent, Cheryl. Cheryl, you got a microphone? I'd love to get your input on how you felt the course went. Cheryl here's just, she's been in our level 1 course, and I've been rooting for her. But if you ever feel like coming on, the course is great. No microphone. Brian, you smell. Oh, okay, there you go. Thanks, ma'am. Appreciate it. No laughs on that one. I do smell, so actually that was just proving a fact. It's all good. No sweat, dear. Anyway, so the point of the matter here is I think we're up against a buy the rumor, sell the news. Hey, is that Crypto guy? Is that you over there, Crypto M? Is that Crypto guy? I think it is. You're like Da Vinci's buddy, aren't you? Maybe that's somebody else. Anyway, well, good to see you over there on the YouTube. Omar, buy the rumor, sell the news. Boo hoo hoo. 007, buy the rumor, sell the news. Good. Well, at least you guys are getting that good. So, I mean, is it, am I setting, if I was like a retail broker, am I setting my clients up by walking out to them saying, I think this is a great buy in here and you're going to make money? I'll tell you, if I can put right on the time frame, you cannot ask me for 3 to 5 years how this is done, then this is a total no-brainer. This is easy. But if you're asking me over the next 3 to 6 months what's going to happen here, painful. My hunch is it's a bunch of back and forth. And, as I've said repeatedly, and I'll keep saying it over and over and over, through this next 6-month period, pullbacks, in my opinion, are absolute gifts. And I think that the public is going to shit their pants, and you might see some absolute disastrous price action to the downside. No, I'm not Crypto from YouTube. The Crypto M from Twitter since 2013. All right, well, there you go, dude. Sorry to infer anything. I was just wondering if Dab's buddy was listening to us too. So, there's your picture. As I said, I wouldn't be surprised if we're now back up against top end of the range, blah, blah, blah. I've heard it lots before. Candle body highs on this Ethereum. We've got a big fundamental event kicking ass. And of course, we've got our big stock market-y people freaking out into the end of the month. Crypto's gotten to the point, people, where, if you are a crypto fan, I think it's in your best interest to pay attention what's going on in the rest of the world. Actually, somebody was asking me just a moment ago if we could take a look at BTC versus like M2 and all that kind of stuff. I think, there's a huge debate here about Bitcoin versus measured in US dollars and Bitcoin measured in things like euro. I mean, look at what's going on in euro versus Ethereum right now. It's a fucking shooting star. Wait a minute. I thought you were a bull. What the fuck? So, kind of like that person who was asking about that trading that altcoin versus Bitcoin right now. You have to understand there are a ton of moving parts here that are going to make this game extremely difficult here. Over the next little while. This isn't going to be easy, folks. And like I said, I started this video off by saying, do I really want to do this right now? And all these people are going to fucking bust my chops about all this? I mean, honestly, I don't even know if it's in your best interest for me to even do this. But anyway, I'll try my best. Imagine that. What a great sales pitch. The guy halfway through the sales pitch goes, yeah, you know what? This probably isn't for you. I love it. Yeah, I mean, hopefully, we get a bunch of downvotes for that. I mean, anyway, this is Bitcoin versus Stamp and Bitcoin versus Euro. Excuse me, Bitcoin versus US dollar. And actually, I thought I had it on here. BTC EUR versus did I have it on Stamp here? I thought I had it on Stamp. BTC EUR Coinbase, because I thought I had the same chart. Oh, I guess not. No, BTC, what a doofus. Okay, am I getting drunk here or something? What's going on? Why can't I find Stamp? I thought it was on Stamp. That's weird. Oh, there it is. It's the second fucking one. Oh, all right. Maybe I'm just about done here, folks. I've been blabbing away for an hour or so. So all I wanted to point out here was if we look at the same levels on Bitcoin versus US dollar and Bitcoin versus Euro, they actually aren't giving the same signals. So it's a little bit disturbing. And actually, is this high or high? 93.21, 93, 92.99. Oh, it is. Yeah. Wow. What time is it? Yeah, I should probably wind this up. Okay, so something along those lines, and then we go boo and go boo shmoo. Oh, come on. There. So we have not broken out here on this this euro denominated Bitcoin bot setup. I thought that was interesting, and all we did was just rally up against this high, and now we're backing off again. So I think I put a tweet out with the real Bitcoin, please stand up. And is this rally that we've seen here in crypto versus USD? Is this really more a question of how shitty the US dollar is versus how wonderful Bitcoin is? If I look at it, Bitcoin versus Euro, like I said, you can see, we're right up against those highs, candle body highs, blah, blah, blah. Versus Euro, we're not even close to those highs. And now we're starting to back away. What the fuck? So, that's a moving part of this conversation. I do see a number of people on that YouTube feed and stuff are asking me to do things like look at it versus M2 and stuff. So the good thing about this is they really haven't fucked around with Bitcoin too much since the massive dilution, but I could be mistaken. Let's see. Yeah, so the image doesn't look a hell of a lot of different with the M2 analysis for Bitcoin. All right, so if we go just Bitcoin, and then so there's the M2, and then there's the regular. So you can see that we're actually not close to the highs, not even anywhere near the highs, if we try and analyze this in a stable currency. And interestingly enough, I think you can actually make the argument we're still in a downtrend here. So be careful analyzing versus just regular fiat. Like I said, this is going to be an extremely difficult time. Next 6-8 months, oh man, this is going to be tough. And, this is going to be, and basically we saw it on Twitter. I'm starting to see it, but same sort of thing. Barstool managers like, fucking Warren Buffett's an idiot. I'm starting to see it. People are like, Brian, you're just an idiot. Why? And I'm kind of like, well, why are you following me? I couldn't give a shit whether you follow me. Don't follow me. I don't care. I'm not shilling anything. I'm not selling anything. Go away. I'm sure Mr. Buffett's probably the same thing. So, through this next 6-8 months, we're going to probably have a ton of that where people are like, Brian, who cares what the fuck you think? And like I said, I don't even know whether I really want to continue on this because it's like talking to a brick wall right now. People aren't even using any logic whatsoever. I ask people to do very specific things, and then they start doing other things that they didn't say they were going to do. I try to hold them to account, and they just flip out. It's gonna be a tough period here. Oh goodness! All right, so there's Bitcoin versus M2. Somebody over on YouTube, I think, has kept asking me about silver versus M2. Omar's been asking me this. Don't let one idiot get you down, please. But I'm the idiot, Sean. Right? I mean that's the bottom line of it. Is I set myself up for this. I feel as though I put my heart and soul into this, and I set myself up to get hurt. Which, at some point, I've got to go. Wake up, Brian. Okay, enough is enough. Leave all this nonsense and let's go on with the rest of your life. But if anything, you guys don't want me to wake up. Stay asleep. Stay asleep. Keep doing this. Keep getting more punishment. Okay, what did I want to show you? Silver! Let's take a look at silver and then we'll call it a day here. So silver, all you Da Vinci fans, you must all be stinking rich. Is that the right symbol? That doesn't look right. S-I, one exclamation. Isn't that what silver features are? Oh, now I did two exclamation ones. Okay, let's try it one more time. Boom. Hey, there you go. Got a chart. All right, well, what do we got here? Ironically enough, this is the same thing as Bitcoin and Ethereum. There's not really much difference. Can you see how this is a pretty important horizontal support and resistance level? Probably, well, here we can do a few of them, right? You can go there. And you can go there. And where's the double top there? And there. So, coming into a bit of a traffic area here. Good old Fibby Fibs. And you know who's gonna be standing there ready to sell you all the silver you'd like. Would you like to buy some silver from me? I'll sell you some silver. Woohoo! So, you know, be forewarned. You know, looking at this chart, what I would sort of think here is kind of like, but this might do exactly like Bitcoin, right? And it might just go sit there and then take off. Or it might come all the way back down against these key support levels down in there. Totally fine. Hey, there's the double bottom. So, I mean, can I justify coming in and buying silver there? You should be able to answer that question. Pretty simple. If I wanted to be a buyer of silver, probably the first, you know, it's just best practices. First things first, let's go and draw nice reload zones. Maybe even throw on 38.2s and 50%. Just try and see some levels. So we got this guy. I mean, look at this. It's just all Swiss cheese here. At some point, you know, and the worst part about it is you guys don't understand how fucking crooked the silver traders are. These guys, they're notorious. But you know, a retail investor, you'd never see that side of the business. But these guys are horrible crooks. Gaps for trade location. I like that. I like that. That's good. Looks like there's something in here. So, can't chase. Same thing as we always say. You know, here's really good application of the level 1 learning material. Maybe this, if we're thinking that this is a trading range, all right, well, we're going to try and buy back in on dips against the bottom end of the range, right? Reload zones. If this, however, is not a range market, and maybe we've started a new trend, and Da Vinci and all his buddies are going to get stinking rich because they sold everything and bought silver instead of Bitcoin. Oh, boo. Maybe they sold their Bitcoins and bought silver. Who knows? Might be interesting to see what a silver versus Bitcoin chart looks like. That'd be an interesting bet. But if this is a trend continuation, what I want to see is I want to obviously fill in this gap. That's a problem. Fill in that gap. Ugh, that's horrible. Never like to see price gaps on charts like this. We want to see a minimum of 33% to no more than, say, 66% of the previous move. So that is like that. Oh, look at that. So if we got my correction I wanted to see and we filled in the gaps, I'd get my 33. Then if we can paint 3 higher lows, then we can start drawing bot levels and I can hunt a new trade. And actually, the gold market, they did exactly that. Kind of funny. There was one old student on the gold. I mean, this is the way I make money on the gold market. Did gold price double in the past month? Nope, but my stock did. Woohoo! But that's here nor there. But we had we had one old student who facetiously said, of all people in this world to take this bot setup, you would have thought Brian Beamish would have taken this bot setup. But for some reason, I didn't feel comfortable about taking this particular trade. But the trade that I'm in to replicate this trade is I'm in this bot. So I'm long from down here, and it's just working its way up. It's just a funny anecdote. The gentleman knows. I don't know whether he's going to watch this, but he knows who he is. But it's kind of amusing. I mean, this bot was, sadly, it's just stunningly textbook. So, I mean, big fat round numbers, $2,000, cats and dogs living together. Why not? And now, based on this timeline, I hate to say it, folks, but it wouldn't surprise me if we got some crazy ass moonshot here up to like 2,200, whatever, on gold here. It wouldn't surprise me at all. So I don't know. I don't know. Well, somebody over there on YouTube was asking me to look at silver versus M2. Does that help at all? I hope it does. All right, it's 12:30 now, so I've been blabbing away for a while. Hope you guys enjoyed that. I see there's a few people on YouTube. As always, if you got any value out of what I've said here today, hit the like button. Maybe subscribe to our feed. Ring the bell up top. I think it's Colleen's bell. I can't remember if we pass the bell torch on to somebody else or not. Colleen says, fascinating, fantastic. Good. You enjoyed it? Andrea says, great. Thanks, BC. Yes. All right, cool. Good. That was insane. Oh, okay. Laughed so much and I learned a great value. Classic TRI. Well, that's good. Excellent. Well, honestly, boo hoo hoo 007, if that is your real name. I mean, that's the whole reason why I do this, right? Is I'm trying to make a positive difference. And I know right now, I mean, literally, I could just fucking break down and cry. I just see how stressed out everything is. And it's just sort of like, people can be triggered so quickly here. And it's just, yeah. Well, actually, Colleen, fucking A, I'm glad you said that. Did you hear that? I didn't even say it. She said it. I'm talking to my wife right now. Sorry. All right, guys. Have yourselves a great day. Wish me luck with the boy. Oh, boy. In 2 hours, we head into autism land. So have yourselves a great rest of your day. All the best. PMA for the win. We actually made it through a video without a single downvote. It's a miracle. Come on, somebody hit the downvote. Do it for me. Come on, hit me. Hit me. All right. Take it easy, everybody. All the best. And bye for now.